Sounds great.
Awesome. Well, hey guys, welcome to July's Masters Series. I was just telling Emily Moore that I have been waiting for this Masters Series pretty much since I booked her back in January, simply because I think that the principles that she is going to talk about and tell you guys some more about today are so important. They're so central to your business. I've talked to you guys at nauseum probably about how when you're running a real estate business, you truly are a business owner, even if you're under a larger umbrella of a brokerage. And Emily's going to go into why that matters and how you guys can go from, just being a commission-based, taking in money and putting money out. She can teach you how to go straight to profitable in no time. It's really easy to implement. I really like all of the things. So without any further ado, hi, Emily. Introduce yourself. Tell them a little bit about what you do and why you're here, things like that.
Sure. Hi, guys. I'm Emily Moore. I run a business called The Bean Countery, and that started out of basically I grew up in an entrepreneurial household, and so I saw some of the struggles and the triumphs that come with that. I went to school to be an accountant and started my career working in some pretty large companies. So for a number of years, I was growing that career and climbing the ladder, so to speak. But I always had this little side gig where I would take, small mom and pop shops and people who were struggling with sales tax questions and just little things that they're really not going to get support from their CPA that they talk to at the end of the year. And I just really felt that's a disservice to really the American economy, because that's the backbone of where it all starts. So as that grew, I ended up, it was in 2012. I was a financial analyst for one of the biggest banks in the world. I hated every second of that job. And one of my favorite clients was a roofing contractor, actually. And he was trying to grow the business, struggling because he didn't know how. And I basically was just doing some back end bookkeeping. I did a little bit of systems adjustments and things like that to make things better. And I was on my way to this terrible job. I called him one day and said, this is stupid. You need me in-house. I need to not be where I am. Hire me full-time as your CFO and we will grow this business. And that's what happened. And it was wonderful and amazing. We implemented Profit First in his business, and they're off to the races. And as I got more into the certification process and all that, I just saw a huge opportunity to share this with as many people as possible. So that client turned employer went back to being a client. And now I'm speaking to people and developing programs and helping to bring a huge change to business owners' lives. So I do that through the Bean Countery. And that's what I'm going to share with you today. So,
awesome.
I'm going to go ahead and share my screen.
So those of you that did not attend last week might not have a total handle on what Emily is talking about, but she's going to explain what Profit First is. It's based off of Emily, stop me if I'm stealing your thunder here. It's based off of a book, and I actually reached out to the author, Mike Michaelowicz, and he recommended Emily to me because Emily has, I was joking with her before we started, she's surrounded by realtors. So we feel bad for her already, but she's surrounded, her brother and her sister are both in real estate. So she has a deep understanding of how our business works and how we make money. So she, as Mike put it, she is better suited to teach you guys than he is, who actually kind of came up with this theory, which I think that is such high praise, Emily. Without any further ado, really take it away. But I just wanted you guys to be clear on that. So if you want kind of the basics of Profit First beyond what Emily says, make sure you look at last week's webinar that we have the recording up there on the library for you guys. So go ahead, Emily.
Sure. And also, I'm going to share my email later in the presentation. If anyone is interested, I have a PDF of the first 5 chapters of the book. Shoot me an email and I will forward that to you. The meat of most of what Profit First is found in that those core chapters. So that might be helpful for everyone too.
Absolutely.
Okay, so let me make sure this is going to work. Yeah, yay, it is. Okay, here we go. So I kind of have this weird addiction. Actually, I suspect most of the world does too, and it is we are addicted to axioms. I had no idea what the definition of axioms was, but now that I have the word to fit with what it is, it kind of makes sense. So an axiom is simply, it's a common shared belief. It's established. No one really questions it. It's a given, right? So if we're talking in geometry terms, like there are certain givens that you just know to be true and no one really questions it. It doesn't mean they're always actually factually correct. It's just something that we all assume to be true. So for example, until about 500 BC, people thought the world was flat. Now, not a lot of people questioned it, but for those who did, that was kind of a dangerous proposition, a dangerous dance, if you will, because a lot of them were killed. So challenging these axioms is sometimes dangerous, but sometimes it just rubs people the wrong way. Like, well, how can you question that? This is the way it's always been. So they're found nearly everywhere in society, and they really just aren't challenged very often. So an axiom in business that we all kind of know and have heard is sales minus expenses equals profit. And we've all accepted it to be true. We don't really question it, but it's not right. Since we're all following it, if you think it were true, don't you think we all would be profitable, right? So take your sales minus expenses, boom, profit, easy. Fact or logically, mathematically, yes. If you take your sales, you subtract out your expenses, what you have left is your profit. But behaviorally, it doesn't really mesh with the way humans work. And here's just a little bit of a statistic. So the SBA, the Small Business Administration, did a study of 28 million businesses. And what they found is basically 83%. And small business means any business making up to 25 million. So like some of us wouldn't really consider that a small business, but the SBA does. So you're in good company if you're anywhere from 0 to 28 million, you're still considered a small business. They found that 83% are stumbling through their cash flow and are really 1 or 2 bad months away from shutting down.
And not to cut you off, Emily, but you guys, and I don't want to beat you guys up because I know that you guys definitely don't fall into that category. I'm going to go out on a limb and assume. But the key here is, and the reason why I think this is such an important topic that we address, is realtors are a large percentage of that. When you look at just people in general, I don't have the statistic in front of me, but people in general that are in tax debt, realtors make up a larger sum than almost any other industry in the world. And part of that is how we bring in our income. So this is extremely relevant. Even if you are profitable, this will allow you to think about it differently and understand it in a different way. At least it did for me. So definitely tune in here.
Yeah. And so, and also I'll just kind of mention as well, if you're a 1099 contractor, you are CEO of a business. Right. So like you might, there are people who do painting on the side to get a 1099. That's a business. So a realtor who is doing 1,001 things right all the time, right? Like you're meeting with people, you have to be able to build relationships. You have to understand the legal aspect of what it is you're doing and the seriousness really behind that. You have the trust of all your customers and your clients, and you kind of need that. Otherwise, you wouldn't get referrals, right? But those are all just a handful of things that you do amazingly well. And so it's no real wonder that some people who find themselves like transitioning into that career might stumble with some of the business aspects if you haven't been in business before. So this is not a preach fest of telling you what you're doing wrong or anything like that, but this will change the game for you if you implement it. And not just for realtors. I mean, I implemented it in my business and it's changed everything. My husband is a barber, he's self-employed, changed everything. So we love it in this house. But anyway, so 83% of businesses, and I realize also realtors don't really have payroll to meet and certain expenses that some other traditional businesses might have, but 83% of businesses, if they have a week or two of bad collections, they won't be able to make their payroll obligations. Like the owner then has to question, do I not pay my staff or do I not pay myself? We have to make those hard decisions.
Well, it looks similar with a real estate industry where, you're right. It in my eyes, us not having payroll actually makes it easier to implement this.
Yes,
it does. But I think there's one of the most common questions I get, and I get it from a lot of you guys, is how do I know when I'm ready to hire an assistant? Like, I'm nervous about this cost.
Mm-hmm.
And as well you should be. But what Emily's talking about is if you don't do as many deals as you traditionally do in June, how are you going to pay them in July? This takes care of that. This gives you that financial and that mental and emotional stability to kind of make these choices and grow your business in a really strategic and sustainable way, rather than just say, I'm so busy, I need the help, I'm going to hire an assistant, and not thinking out into the future.
That's right. And also, and I'll get into this, but the beauty of it is really we're leveraging the behavior you're already doing. We're not really asking you to, if you want to be successful in this, you're going to have to change everything. You really don't. This kind of sits on top of the rest of the way you're running your business, and it just makes it all easier. Okay, so sales minus expenses equals profit. We're going to flip that. Sales minus profit equals expenses. There we go. Okay, so simply put, we put the priority on the thing that comes first, which is, well, sales comes first, but the thing we're controlling here is the profit rather than the expenses. Because profit is what you need, like that's what keeps businesses existing from year to year. They're incredibly important. So I'm pretty sure we all remember playing kickball as kids. I honestly, until just a few years ago, had a kickball league for grown-ups. It was actually a combination of wiffle ball and kickball. We called it wiffle kick. I'm in Northern Kentucky, but it's the greater Cincinnati area. We had a lot of fun with that. But the traditional picking of teams that we remember from growing up is, for some, a really traumatic experience because no one wanted to be picked last. Why? Because last is the undesirable thing. No one wants the last of anything. No one wants to be the last of anything. We don't treat our families last. We shouldn't put our health last. So why are we going to put our business last and our profit last? So changing the equation puts the onus on profit. So what I'm really going to share is the paying yourself first mentality that kind of is a concept that's been passed down from wealthy people for ages. But we're going to apply it to your business, and it's an absolute game changer. I mean, just think of the introduction of the 401k to the traditional employees. You are taking a percentage of your gross earnings and setting it aside for retirement. You're doing that first because if you didn't, you wouldn't have a retirement. And you're adjusting with what's left over, and that's what you're going to live off of because you've made it a priority to set aside 5-10% into that retirement fund. So it's kind of similar to that, but really the point there is we're going to do it first because that's the biggest priority. So how many of you check your bank balance once a month or once a week or once a day? Who's checking it right now?
Yeah, right.
That's right. That's what we do. And it's something we all have in common. It's totally natural. We don't want to change that behavior at all. Instead, we're going to set up a system that channels that current behavior and leverages it to where we want to go. We're going to Profit Town. We're going to get quarterly bonuses, and our taxes will be covered, which is, I'm pretty sure, the dream we all had when we started business. This just puts the roadmap out there for how you're going to get there. So bank balance accounting, traditional accounting, and I guess this is the fault of my industry for the last 200 years. Modern accounting was just invented 200 years ago, and it tells us that traditionally, if we need to make our decisions based on what we have, what we've taken information-wise from our financial statements. I tell my clients all the time, well, before Profit First, you need to understand how to read your financial statements. And I would, spend hours explaining to them and showing them where to find it and what they'll find in each of the different reports, because they all communicate different things. And they never listened, which is fine. But all that does is it created a kind of a love-hate relationship that clients have with their accountants, because accountants are asking them to change their behavior in a way that they don't want to do. So, and then here's actually the question that I got asked by my roofing contractor client, who right before we transitioned into Profit First, I would talk to him about profitability, and he'd say, if we have 20,000 in profits right now, why do I have 6,000 in the bank? Like, where's my profit? Why don't I have the cash to speak for that? And this is how you will get from seeing like such a disparaging difference between what your profit and loss says and what your bank account actually says. This will kind of make them match up a little bit better.
Well, and for you guys, where I would kind of want to expand on that too, is what we fall victim to, all business owners, I think, in traditional accounting fall victim to this, but it's especially prevalent with realtors, because you can go and you can have a banner month and make 50 grand in a month and then have zero the next month. And the problem is, when you're making this 50 grand, you're spending at the same rate. And so when you need to have kind of the cushion for the next month, and we do it over and over, and we say to ourselves, it's the highs and the lows. What Profit First has the ability to do for you guys, it's not going to get rid of the highs and the lows. It's not going to get rid of the income disparities that you have month to month, but it's going to make it feel like this instead of like this, which right. This is a lot easier on everything in your life. So I just want to make that very clear for you guys of how you can draw that analogy to the roofing business.
Yes, very true. Okay, so step one of implementing, there are really 4 steps to it. It's really, this is really simple concepts. I don't think anyone's going to be super overwhelmed. You'll have questions, and that's fine. Again, I'm going to share my email address if anyone has a question. Or do they have the ability to post questions?
Yes, so if you guys have questions in it, you can drop them in the Q&A or in the chat. And then obviously Emily said that she's going to include her contact information. I'll do that in the recording as well. So if you're watching the recording here, just in the text box below, you'll see all of Emily's contact information for you. Okay. So most businesses have one general checking account. But with Profit First, we want actually 5. Sounds really like that's just going to create pandemonium, but it's not, and you'll see why. But we do want 5. So let's think about. Let me just move this real quick so I can see a little better. Oh, sorry. Okay. So let's think about Thanksgiving dinner. Someone slaves for hours
while the turkey roasts or fries or however it is that you prepare it. Finally, it's time for the big reveal. The bird is put on this special occasion platter, right? Brought to the table. Everyone oohs and ahs because they're starving. They've been waiting for hours for this thing to get finished. And everyone takes a look at it. Can't wait to dive into it. So do we all just grab our fork and knife and jump onto this turkey in the middle of the platter? Like, maybe some people do.
If you're my kids, you might.
I haven't been to a Thanksgiving dinner yet where we've actually all partaken in that behavior. But no, someone carves the turkey and it gets kind of distributed to everyone at the table, and we all sit down and we put other stuff on it and we eat it. So we have one big platter and we disperse it into smaller plates. Also, you know that in the earlier days of our culture, the plates themselves were a lot smaller than what our dinner plates are today. Over time, as we've had more access to better food and all that stuff, plate size has more than doubled, and consequently, so have Americans. Because we fill our plates, we clean our plates. As the plate size increases, so do our portions. Sometimes the easiest trick of using just a smaller plate in your home will trick your brain and you'll eat less. Like, that's just one of the really simple kind of weight loss life hacks that people implement because it works. You trick your brain, you're eating less and you're getting healthier with really not changing a whole lot. So this is what we're doing with Profit First. So based upon data we've gathered from businesses that earn up to $250 all the way up to $50 million and more, we've kind of put together this grid which shows this is kind of your target allocation percentages for where you want your money to be working for you in different areas. So we're just going to use the example of column A for this. If you are a realtor making more than $250, you would just move up to the next column, and that would be your target percentages.
And I have downloads for you guys. It's included in the recording in the margin there, where you can download essentially the blanks where you can input each of these things for both the 0 to 250 and the 250 to 500. If you need more than that, I don't believe any of you do. Looking at the attendees, let me know, and I'm happy to give you guys the other ones. But I don't believe any of you need more than that right now.
Okay, so using the up to 250 column, ideally we would want to have 5% set aside for profit. Owner's pay, which is, you know, what you're going to take home personally, 50%. Tax, we have that set at 15% of your gross commissions, right? Like, we're not talking about after all of your expenses and all that stuff. We're talking about based on what's deposited from your agency or from your deals. 15% is going to go to tax. Now, Alyssa kind of encourages a little bit slightly higher rate, and that's fine too. And it's, you know, if you put in 18 to 20 or even 25, which I think might be a little too high, but the worst that would happen is you have extra at the end of the year. Yeah, you would get a refund, or you would just have extra in that account.
For sure. And what I explained to Emily too is how I allocate it is I'm just conservative when it comes to this. So I have a higher percentage that I save in that tax account and I use for the taxes. And then a refund or whatever I get back, I actually put straight into my profit account, not into my owner's pay, into my profit account, because that's really what it was. It was profit of my business.
Yeah.
And so that's how you could do it if these percentages feel low, or if talking to your CPA, you feel like that's not enough. So be it, adjust them accordingly, and then use the leftover toward profit is how I recommend doing it.
Yeah. Although I will say, again, this coming tax season is going to be an interesting one, just because we have a lot of changes rolling out. But one of those changes that's most beneficial to the realtors is the 20% qualified business deduction. So whatever, you know, when your tax preparer is completing your forms, let's say you profited your taxable profit is, I don't know, 10,000, you're going to be able to take 20% off and apply that, which then goes down, and that's going to be your new taxable amount. So that's going to be really helpful, and might make it to where the 15% is going to be fine. But again, and we'll talk more about this later, how if you want me to take a look at where you are and kind of help with some of these, I'm more than happy to do that. So if this is our target in a business that size, what would it look like for one of your deposits? So if a commission of $3,000 will be deposited into what we call the income checking account or your deposits account, which is basically just a holding account. You're not going to pay bills out of this account. This account is just to collect all of your revenue, and then it's going to be dispersed to these smaller plates. So your deposit account is the turkey platter, right? 5% of that $3,000, which is $150, is going to go into a profit account. $1,500 or 50% is going to go into a separate owner's pay account. $450 or 15% will go to tax, and then the remaining $900 or 30% will be moved into your operating expense account, which is where your, all of your business expenses will come from. Okay, so step one is small plates. Step two is vegetables first. So going back to the plates imagery that I just talked about, we all basically serve our meals with all the food being placed on the same plate. So you've got your steak, your mashed potatoes, your rolls, and your asparagus, or whatever your vegetable might be, steaming on the plate. So as humans in this scenario, our preference will default to what we desire the most. And for most people, that ain't the asparagus, right? So people are going to have a few bites of steak, and then maybe mix in a little mashed potatoes and take a bite of a roll. And then once their bellies are a good 3/4 of the way filled up, they might take a bite of asparagus, right? So by the time we decide to have some asparagus, our bellies are full, and it's full of the other high fat, less good for you stuff, even though the asparagus gives us the most value to our bodies, right? But if we decide that our health needs to be a higher priority, another little hack for that is to serve the vegetables first, right? Eat the veggies, then venture over to the roll soaked with butter and the juicy steak and all that stuff. It'll allow you to still eat what you want, but you're getting all the value, and your body is getting what it needs the most from the vegetables because you're getting more of them. And so the same is true for your business. Profit is our vegetable in this case. Profit is what your business needs to survive. So eat it or take it first. It's all about the sequence that we eat our meal or handle our cash. Profit is first, followed by owner's pay, tax, and then operating expenses. So here's just a quick overview of the 5 accounts and what they're for, what their job is in this scenario. So your income or deposit account, this is a holding account, that's it. So all of your income should be deposited there. The profit account is your reward as an owner for running a healthy company. It should be a savings account. It should be opened at a bank that is not where your deposit account is. I actually recommend a bank 20 miles out of the way because you only want to access this money once a quarter. And if things are tight, you don't want to be dipping into it. I mean, that's really the biggest purpose for that is it's out of sight, out of mind. You don't want to see it.
And one of the other tips, I believe it's mentioned in the book, or it might have just been mentioned by the person that recommended the book to me, is sometimes if you don't trust yourself, it can be helpful if you put like a spouse or needed an additional signature to pull from that account.
Yes.
And essentially what you're doing is just making it hard to pull from that account.
Right.
And so adding that additional step as you're starting to implement this, I think can be a really great strategy to keep you honest here.
Yeah, I totally agree. Now, owner's pay account, this is not your personal checking account, right? And for a good reason. So first, let me describe what it is. So this is the account that will eventually be what's paid to you as the business owner. The owner of the business is typically the business's best employee, right? You've got the most at stake. You're going to work the hardest. You're going to sacrifice more than anyone else for the success of your company, and you should be paid accordingly. So this should be a checking account opened at the same bank as your deposit account. So at Bank One, you've got your deposit account, your owner's pay account so far. At a separate bank, you've got profit so far. And in the more advanced profit first strategies, we kind of use this owner's pay account as a bit of a drip account, right? So it'll kind of help ease some of the volatility in your seasonal income fluctuations that you have. But we can talk about that later. But the main gist is the owner's pay account, that's what you're going to pay yourself. So put it there, get it out of the deposit account and in the account where you want it working for you. So fourth one, tax account is the taxes aren't your money, right? So you earn it, but you earn it knowing that a portion of it is not going to really be claimed by you because it belongs to the government. So this is for Uncle Sam, and it's very important. Many businesses don't have the money to pay their taxes at tax time. They end up taking loans or setting up installment agreements or taking the money out of their personal accounts, which we don't want you to do, right? Like, how demoralizing is that when you have a business, you want the business to be able to take care of the business and the personal taxes. And the only way to do that is to set it aside. Otherwise, you're going to spend it, you're not going to have it, and you're going to be panicking at tax time. And if you're someone who owed in 2015 and set up an installment agreement that took 3 or 4 years, I mean, as soon as you're probably rolling 2 or 3 years at any given time, right? So you're always trying to catch up with last year's obligation, which makes it really hard to be proactive with this year's obligation. So we want to avoid that entire mess. The tax account should be a savings account opened wherever the profit account is. It's fine for them to be together because you're only accessing both accounts every quarter. At the end of each quarter, you can leave it in the tax account, or what I recommend is to just send whatever's in there to the IRS as a quarterly estimated payment to avoid the 10% penalty if you don't do that. And then the fifth account is your operating account. This is the primary operating account that you're going to look at the most. This is the bank balance that I want you to be checking every day, or, this is where you're really going to base your spending decisions is with what's there. Okay, back in 1955, there was a sociologist who established the Parkinsons Law. And it basically says our demand for a resource will fluctuate depending on what the supply is of that resource. For example, work, you've heard this, work expands to fill the time you give it, right? So if you have a project that is slotted to take a week, you're likely going to take the whole week to do that project. Same project, if you have 8 weeks to do it, you're likely going to take the whole 8 weeks to do it. That's just human nature. Another example, we've all hopefully used toothpaste before. So tell me if this sounds familiar. You get a fresh tube of toothpaste and you're just not paying any attention to portioning it out or rationing it from yourself. You just get a big glob on that toothbrush and brush your teeth with that. If in the process it falls off, lands in the sink, no big deal. You just go and apply an equally generous glob of toothpaste. As the month goes on and there's less resource available, you get a lot more creative in extracting the value or the toothpaste out of that tube. You start working your thumbs and you start twisting it, and finally you might start actually squeezing from the bottom, which is what the tube tells you to do anyway. Don't get me started on that. So we get more innovative, we get more creative as the resource that we want is shrinking, right? So basically, profit first is we want your operating expense account to feel like a half-used tube of toothpaste. We want you to be creative and innovative and not frivolous with it. If there's something that you feel is necessary, like a necessary expense that you really need to have, like extract as much value from that as possible. Get as much from the expenses that you're spending and investing on to really make it worth it and get the impact that you're looking for.
And I think it's important, you guys, to mention here that we're not necessarily saying, like traditional accounting does, is cut your expenses, always cut your expenses. That's not always the solution there. We're saying expenses are a fine thing to have. You just need to make sure that what you're spending on is providing value back. And if it's not, that's how you can cut it. But the way that Profit First works is it really does highlight the expenses that you have that aren't providing value because there's less to work with. So if you've always struggled to say, you know, I do sign these annual subscriptions to things and like I don't really use them, or I'm not participating the way that I want, this method of accounting really highlights those things and makes it a lot easier going into next year.
Right. And it's not, and you know, like let's say there is a subscriptions are a huge obvious thing, right? When you're looking at things like, oh, well, I don't use that. It's not even necessarily saying get rid of it. It's you're spending this money. Are you willing to really participate in whatever it is to get the most out of it? Or if not, get rid of it because it's giving you no benefit, right? And also, since we're talking about operating expenses, I cannot stress enough the importance of separating your business and personal money. Like these accounts, at no point should a personal expense flow through them. Your business kind of demands the respect that it takes money to run it, and it takes your business's money to run your business, right? So if you are currently commingling those funds, like
stop.
Not only that, but if you're audited, the IRS makes it painful. If you can't explain and justify what you're doing, they're not fun to deal with when it comes to stuff like that. So have you ever thought back to like when we were younger, so like when money was super tight? So I often think back to this when I was in college. I had a full-time job. And a part-time job. I was making, I think, around $20,000 a year. But I had a car. I paid rent at an apartment. Like I bought my own groceries. I purchased books. I had somewhat of a social life somehow. I don't even know how I did that with the energy. But I was able to fill up the gas tank, and I still managed to buy my family Christmas gifts. And I'm like, how did I do that on 20 grand and probably 3 hours of sleep every night? But as I've earned more and more throughout my career, the demand for my money has increased with it. And that's also Parkinson's Law. Like, right, there's more money available, so therefore I need to spend more money. So, instead of keeping it all together and not really knowing what the purpose of any of it is or where any of it's going to go, allocate our money in the proper sequence to the proper account. Manage what's in the operating expense account. If you come to pay bills and there's not enough to cover your bills in the operating expense account, that's your business telling you that you can't afford these bills on the amount of revenue that you currently have. So the solution then is to either cut expenses or increase your margin, and that means really bust your butt and go sell some more, or sell the same amount, but maybe get higher value homes that you're prospecting. So those are really your only options. You cut the expenses or increase your margins, or a little bit of both, which would really probably help the most. Okay, removing temptation. So I apologize. I realize it's lunchtime and I've been talking about food a lot. So I hope everyone's got some food at their desk or something. but it just works really well with the subject, so just bear with me. I have a huge sweet tooth, right? I could skip, like when I get busy working, I could skip 3 meals in a row and not think twice about it. But if I know I've got my daughter's Girl Scout cookies like in the kitchen, like my willpower might last a few minutes, maybe a couple hours. I could distract myself, but eventually I'm going to give in and I'm going to eat a cookie, which will likely lead to like a box of cookies. So one, and this has happened, like 1 minute I'm saying like, I can hear her in there chewing. I want one so bad. But nope, I've got all these things to do. I'm going to keep myself busy. And then the next thing you know, like I'm in my room with the door shut and the whole box of peanut butter cookies is like completely gone. So this occurs every year, and then I feel really guilty and shameful. But this year, someone told me the most obvious thing: put them in the freezer. So like you've heard of people who are trying to get out of debt, a lot of them will like freeze their credit card so that it's not so easily accessible, and they have to actually wait to thaw it out to read the numbers and all that stuff. It's kind of the same concept. But that's also what we want, how we want to look at the profit and tax accounts. Like things might get a little tight while we're going through the implementation and figuring out our rhythm. You don't want to be able to just snatch, $500 out of that profit account and say, well, I'll pay it back, because you're not going to pay it back.
Right.
Won't. I mean, it's maybe you think you're superhuman and you will, but you won't. There will always be an excuse not to do it. So remove the temptation, keep that money as far away as possible. I've even, like, my profit and tax accounts aren't even at a physical bank. They're at an online savings accounts that I have. I don't even know where the funds actually are, but they're not here, and they're nowhere I can get to them anytime fast. So the benefit of doing that is you get a quarterly profit distribution. So if anyone owns stock in publicly traded companies like Ford, for example, I don't know, Ford might not be a good example. I don't know how profitable they are right now, but then you're probably no stranger to receiving a check in the mail every quarter for, I don't know, $12, $15 for your portion, depending on the shares that you own in a company, of the profit for that quarter. And treating your business like a business, we want to see the same thing happen for you too. You are the primary shareholder of your business. So therefore, when it's profitable after a quarter, you should get something from that. So every quarter, we're going to take 1/2 of the profit account's balance. And you can use that for anything. You can go on a vacation. You can buy Christmas early. Just whatever you want to spend it on. You can reinvest it in your business if that's something you really want to do, but I wouldn't encourage it. I think it's good for morale, and it's good for incentivizing and keeping things motivated and moving in the right direction. Now, one thing that you can use profit account for that's not for your own personal delights of whatever they are, if you have business debt, take it out of there. And also, I don't know, it could just be me. I feel like everyone is aware of what the debt snowball concept is. I think Dave Ramsey is the one who kind of developed the terminology for it. But if you have 5 different debt accounts, varying balances, start with the smallest balance. Like say, you have $600 every month that you can pay towards debt. Make the minimum payments on everything so that nothing goes into default, but throw as much money as you can at that small balance. And then once that's paid off, still paying $600 a month, you just roll what you had thrown at the first account to the second. And the profit account, utilizing that for this, really helps speed that up. Mm-hmm. And profit or debt is going to just annihilate your profit if you let it. So obviously we don't want to see anyone in debt. Using credit cards is fine, but pay them off. And if you can't, then something needs to be adjusted. There really shouldn't ever be like an ongoing routine of just seeing that balance go up every single month. you won't be able to effectively implement profit first if you're doing that, because it's just going to steal all your money. Mm-hmm. So also with the close of a quarter, we send what's in the tax account to the IRS, and we do an adjustment of our caps, which is the current allocating percentages. So like what I showed you earlier in that grid, that's called a target allocation percentage, which is a TAP. And what you're actually doing is a cap. So that's kind of the terminology there. So yeah, at the end of the quarter, it's celebration time. Like, look what I did. Look how much I was able to set aside. Look how much I won't be crying in April. And it's a good motivator to carry it on to the next quarter, which makes it exciting and fun and not a tedious money chore.
And one of the things I love about Profit First as a real estate coach is it also keeps you honest about your real estate goals. If you're not hitting your sales goals, it will show in your profit accounts.
Yeah.
It'll show in all of your accounts, actually.
Yeah.
And so that's how frequently you really need to be looking at those goals and saying, am I on track? What does my pipeline look like? And this is a really tangible way to do that. So keep that in mind for sure.
Yeah. And again, like it's not adding a lot of complexity to your life, right? You're still doing your bank balance accounting. You're looking to see what's available and ascertaining that with what are my goals, what do I want to take it, and do these things mesh? Will I be able to meet this thing I have that I want to do with the course that I'm on right now?
Absolutely.
So before I go on, there is a fourth principle. I didn't put it in the slide. It's rhythm, right? So the reason I didn't put it in the slide is because it really depends upon how frequent you're earning commissions. If it's going to be some time between, especially for people who are just starting out, like if you've got quite a window between, sale number 1 and sale number 2, there really isn't a rhythm there, right? So what I tell my real estate people is if you're not real consistent with when you're closing sales, then as each commission is deposited, go ahead and allocate it then, whatever day that is. But if you find yourself in where you're consistently kind of there's more than one deposit every 2 weeks, then obviously you're going to want to establish a rhythm. Profit First in the book recommends the 10th and the 25th to be the days that you allocate from your deposit account into each of the smaller accounts. Some people do it every week. Some people do it every 2 weeks. It's not really as important which days you do it. What's important is that you're consistent with it, because as you establish a rhythm, that means you're paying yourself on that rhythm, and it kind of starts to feel like a paycheck, like it's more steady and consistent, and you know what to expect in some degree. And as you develop a rhythm, if you see, I'm used to seeing these $2,000 payments to myself, and this one's only $800. Like, what's happened? Why aren't my sales where they need to be? You notice it really quick when it affects what's coming to you. So rhythm, establishing the rhythm is important, but it's just kind of depending on the flow of your cash now is kind of where you're going to set that rhythm, and that's up to you.
Perfect.
Okay, so I have one more illustration to show you how we can literally start the path to profitability like today, and it's super simple. But first, I just want to share real quick and offer with you that the bean counter currently has available. So while Profit First is a fantastic way of managing your cash, right? And it was a game changer for us. But there are still some pitfalls to avoid, and there are some more advanced topics like setting up the DRIP account for fluctuations and what your deposits look like. So I see this as a vehicle to change the course of your business. It's just there might be questions that you're going to have, right? So I encourage you not to go it alone. the number one reason is accountability, right? So you want somebody who you can, find a buddy that you both want to implement and can kind of lean on each other for questions or motivation and all that stuff. But I have a group implementation program, right? And so it lasts 3 months. We lay out all the steps to be taken and when. I'll answer all the questions that you may have, or perhaps you haven't even thought about yet, which there are always questions that come up later you haven't thought of. I'll guide you through which banks are the most favorable to having the multiple bank accounts. And we'll kind of tell you how to communicate maybe with those banks, like, okay, I'm going to open up 16 million accounts today. What do you? So we kind of ease all of that anxiety and frustration that you might have. The really beneficial parts to the program are when we start, I do a one-on-one session with each of my customers, and we go through like where you are now, and we develop a rollout program for the implementation, which takes a lot of the stress out of it. And it gives you just a really clear roadmap on where to go. At the end of the 3 months, we do your first quarter review, which is to kind of celebrate all the wins that you had and work out what your distributions are going to be. We'll make the quarterly estimated payment and then adjust. So like those percentages, for example, if you've got an established practice and you've been operating with completely different percentages than what the target is, we don't want you to immediately start at the target, because that could really hurt and cause a lot of problems. So we want to ease into it as much as possible, and that's where the rollout plan is really beneficial, because it might take 3 quarters, it might take 7 quarters to get to the actual target, right? We want to do it in a way that you're going to be able to do, and B, that's going to be comfortable and not just super frustrating. So that's kind of the benefit that you get with the implementation program. And I usually, for my one-on-one clients, I charge $1,200. But since this is a group, the quarter fee for the implementation is $600. You can pay that all up front, or we can do monthly payments of $212 for 3 months. So if you're interested, just shoot me an email. If you have questions about anything that I've gone over, my email is listed here, emily@beancountery.com. But we can get you set up in the group and on your way to becoming profitable if you're interested in that.
Awesome.
So, yeah. So when someone declares like, oh, I think I want to run a marathon, and they go and they find a marathon coach, right? Like, it would be a terrible mistake for the coach to say, okay, your first training today is to run a marathon, right? Like, you have to build up to it. It's just not healthy to jump completely full-fledged into something that's really something designed to not go that way, right? It's guaranteed failure for the most part. So we're going to lower the bar just a little bit. Here's a story. So family, again, I'm big into fitness. So if a family of overweight people wanted to lose weight, and their coach was very clever and didn't want to overwhelm anyone or make them quit too early. They wanted a sustainable program for the whole family. So instead of creating all these changes to their lives all at once, she suggested the family stand up to watch TV. And they thought, oh yeah, that's fine. I can stand up when I watch TV, no big deal. So after a few days of them standing to watch television, she asked them how it was going, and then suggested that since they're already standing, they might as well just march in place while they're watching TV. So they marched in place for watching TV for a few weeks. After a while, they were marching, and then she mixed in some jumping jacks, and then she mixed in something else, maybe a few planks here and there. And so the next thing you know, they were tired of their living room, and they wanted to take their fitness outside. And so that's kind of how she built this program that actually worked for them, and they stuck with it because it wasn't a soul-sucking change that they had to like completely disrupt their entire day in their lives. So that's what we want to do here. If you are like excited or inspired by any of the things that you heard here today, open a savings account in a different bank and just put 1% into a profit account. Like, just start there. After a month or less, whenever you feel comfortable, like, bump it up to 2% and just be consistent with it. And you'll see, even with 2%, like, it's going to incentivize you and encourage you to keep going. Like, you build confidence with that. I feel like just knowing where your money is and where it's working for you does nothing but push you further, even though you haven't really changed anything. Like, the only thing that's different is, oh, now I know where my money is, and now I know that this is its purpose, and it completely takes all the fog out of your brain about, oh, money, it's great. So I encourage you, and if you're questioning this and you think, oh, skeptical, put 1% in another account and just see what happens. Like,
absolutely. And you guys, that's how I started in Profit First. I was thinking to myself, this all sounds great, but there's no way I'm going to do it. And I actually did it that way. And I saw the impact it was making in my life and in my business and how I was collecting. And I said to myself, let me take it the next step, and really implemented it. And this is how Compass South runs. This is really a really tangible, like, easy to implement way to ensure that you are profitable in these moments. And I mean, you can do it if you have some debt. You can do it. What I love about this is a lot of accounting methods you can only implement once you get to a certain point. And it's difficult to get to that certain point. What Profit First allows is, it doesn't matter if you are $50,000 in debt or $100,000 in debt, or if you're wildly profitable. You can implement it at any stage, at any time, and just continue to move towards profitability. And I think, you said, I believe, Emily, 7 quarters is the time it takes to really see the impact. But I mean, I'll tell you, I haven't been doing it for 7 quarters, and I see the impacts that it's made.
You'll see the impact immediately. It just, sometimes it takes 7 quarters to get from where you are to, like, the target.
Sure. And I can totally see that. But you guys, if you're skeptical at all, I agree with Emily. Just take that small step. There's no harm in doing it. If you don't like doing it, stop doing it. I can't say that you will be profitable after you do that. But I think it's something that, we oftentimes convince ourselves of. It's another thing I have to keep track of. Right. But I think what it actually did for me is it took the amount of time that I have to spend on my numbers each month and drastically reduced it, while also making me much more profitable. Which I think is really interesting, is we spend so much time looking at our numbers, trying to figure certain things out, and it's just not working. This works. I know this works. And so, if you have a system that's working for you, by all means, you can stick with that system. But if you have something that's not really working for you, or if you don't have a system, definitely give this a try. Have an open mind on it.
Yeah. I mean, you're basically reverse engineering the results that you want to see in your business, right? And you, as the business owner, have really complete control over the success or failure of how well you're going to do. So doing this says, you know what, I want to be 5% profitable, and it's important to me that my taxes are paid, and I want to take 2 vacations every year with my family. Like, then do it. Like, this designs it. This helps you design what you want the outcome to be. So you set it up, you follow the path, and you're there. It's super fast. It happens so fast.
Absolutely. Well, Emily, thank you so much. You guys, I'll include the information for you and Emily's contact information for you guys down below the recording. But thank you so much. This was so helpful, at least for me, and definitely for the group. I know that you guys can take this stuff and take it from 0 to profitable, or from profitable to more profitable, which I hope it's the latter for you guys. But thank you so much for your time.
Thanks for having me. This was great.
Really, really appreciate it. So,
all right. Well, if anyone has any questions, just shoot me an email.
Sure thing.
Thanks everyone. Bye. Bye.